Yesterday, we had the much anticipated December FOMC meeting, and let's just say it didn't exactly inspire confidence. The Fed announced a 25 basis point rate cut, which on paper might sound like it's good news, but the market didn't see it that way. In fact, we saw a sharp sell-off across the board, with the Dow dropping over 1,100 points, the S&P and NASDAQ taking heavy hits, and volatility in the VIX shooting right up. But why the negative reaction? It boils down to a few key things. First of all, while the Fed cut rates, Jerome Powell made it clear in the press conference that the future cuts are going to come slower than expected. Now, that's a big deal because markets were pricing in a more aggressive easing cycle for 2025. Second, inflation is running hotter than the Fed would like, so they're signaling that tighter monetary policy could stick around for longer. That's a tough pill for the markets to swallow, especially when so many people were hoping that the Fed was ready to fully pivot. And finally, we've got broader uncertainty, economic risk, global tensions, and even upcoming fiscal policies that could shake things up. Investors are on edge, and this meeting did nothing to calm the nerves. All of this is setting the stage for some potentially big moves in the market. So today we're diving deep into the charts to see how this is impacting price action and where we could be heading next. We're going to get into my prior setups from earlier this week and whether or not they're still valid for Bitcoin, Ethereum, and Solana. So if you're new here, welcome. If you're returning, as always, welcome back. You know I need your help to beat the scam bots that post on my videos, so be sure to like and subscribe if you're not already subscribed, and also leave comments down below to show YouTube that real humans enjoy this content. So let's take a look at the impact of last night. This article shows us that over the last 24 hours, the broader crypto market saw over $780 million in liquidations. Obviously, the news from the FOMC spooked the markets, and cryptocurrencies and stocks took a severe beating. Also in today's news, we have a warning from 𝗧𝗿𝗃𝗍, who is making a prediction here around the date of the inauguration. He believes that before we get to the crack up boom phase in this crypto bull market, the crypto markets will experience a harrowing dump around Trump's January 20th, 2025 inauguration day. But it's not all bad news, because we can see here that if that is to happen, they are hoping to rebuy some core positions at lower prices. And here we can also see the market is currently struggling, but there's no need to panic as Bitcoin will regain momentum. Despite the ongoing market correction, which saw Bitcoin dropping below 100,000, investor optimism remains high with expectations for next year. Analysts from Bitfinex have raised expectations for the cryptocurrency, projecting that Bitcoin could hit $200,000 by mid-2025. According to their analysis, a major catalyst for this potential surge is the growing institutional adoption of Bitcoin, which is expected to ramp up throughout 2025, creating substantial upward pressure on the asset's price. And in other good news, the Bank of Japan have decided to keep their interest rates unchanged, and that gives the cryptocurrency market an opportunity to thrive now, as many investors may seek alternatives like cryptocurrency. Low interest rates make traditional savings and bonds less rewarding, leading people to explore assets like Bitcoin. In addition to that, the Bitcoin exchange reserves hit a record low, and this could have us seeing Bitcoin reaching 120K soon. Now, if you happen to watch my video earlier this week, 120K was my target, and I will be sharing my thoughts in this video as to whether or not I still feel the same way. Bitcoin's exchange reserves have been steadily falling throughout 2024, dropping from 3 million in January to a record low of 2.4 million by the end of the year. This decline signals change in how investors are approaching Bitcoin, especially among institutional investors. Many of these investors are adopting the HODL strategy, removing their Bitcoin from exchanges in favor of long-term holdings. So let's take a look at how the markets overall reacted last night. We'll focus in on Bitcoin a little bit later, but we can see here with the S&P, we had a pretty steep drop. And I will say, actually, I did have a look at the S&P yesterday before this happened. And one thing that I noticed that was a bit of a concern to me was this gap up that opened the week. A gap up like that in the traditional market, that's kind of how they do the false move week beginning and stop out people who didn't close their trades on Fridays, because in the traditional market, you can't trade on weekends. So they don't have the same kind of weekend trap that we know in crypto, because crypto is 24/7. So our trap is, small consolidation where price goes nowhere. But the trap in traditional markets is usually set on Friday. And if you don't close your positions on Friday, you could get liquidated Monday when price gaps up or down like this. So I did see that and I thought, okay, this is going to be a pretty highly manipulative week. And a gap up like that may have had inexperienced people that trade these markets believing that it's the beginning of a very bullish week, going into long positions that eventually got taken out, but also at the same time, anyone who was bearish here last week before they closed their positions would have been liquidated on the move up before it actually did turn around in the end. So that alone, when I saw that, was a little bit of a caution to me. It also happened on the NASDAQ here. You can see there's a bit of a gap there as well. So it wasn't a huge trading week for me. It did definitely make me suspicious. Looking at the Dixie, it's simply in a trend. It's holding EMAs, it's creating higher highs and higher lows. So that's not generally great for the overall market. We do have some key areas up here. And if it does continue to make its way up to this 110, 111 kind of region, then that could lead to a further bleed in other markets. Dominance we'll get to in a sec. And finally, this was the VIX that I was talking about earlier with the volatility. You can see here we had a very sharp increase in volatility yesterday because of that news. Now, when we have a look at the crypto dominances, there is a few things to point out. Starting with Bitcoin dominance, you will know if you've been watching this channel over the last couple of weeks, there were a few key areas I told you to look for rejection. Number one was the 50 EMA, which we didn't reject at. We actually did come a little bit higher. And the next level that I pointed out to you was this red vector right here. So there's three areas within a vector that we need to look for rejections if we're going to have continuation of the current trend. So as we know, we broke down through here. This sent our alts flying. We were expecting a retracement. We're getting that right now. And we're looking to see if that retracement is going to turn into a new trend to the upside, or it's going to prove that this right here is the beginning of a change in trend from bullish to bearish, which if you are heavily invested in altcoins, that's what you want to see. So the three areas that you need to keep an eye on is the bottom of the vector, which is basically where the candle is right now. We're wicking at the bottom of this red vector here. Great sign. We want to see a daily candle close that is bearish. And if we get that, we would expect that it's going to continue down, and then it would be safe to start reinvesting in your altcoins. But if we don't get that, then we're going to look to the next area, which is the halfway mark of this red vector, which is at about 59.25%. Finally, again, if we don't reject there, we're looking to the top. And so the top is at around 60%. So three levels to watch, and all you're looking for is your final confirmation, which is your daily candle closes. And if they're not bearish, you would expect that this has more retracement to do. If they are bearish, you would expect it's currently putting in a lower high, and then you would wait for it to continue moving through to the downside. USDT dominance is really not anything worth talking about. It's still consolidating at support. It's under the 50 EMA, which is bearish, but it's holding support, which is potentially bullish. It's kind of in no man's land. We really want to see this break to the downside because it's going to show that there is confidence still in crypto and people aren't becoming risk off, especially after the news yesterday. So still waiting for that one to make a move out of the range. It hasn't done anything yet. And the others dominance, which we've been monitoring also on this channel, had the breakout, had the retest, mentioned at the beginning of this week to look for a H pattern. That has now fully happened. And so now let's talk about what happens at the completion of a H pattern, because it's not a guarantee that this part here is going to happen. The completion of a H pattern is really just where you reset completely and look for new market structure. So what that means now that it's happened is there's one of two things. If you want to be bullish on this, which means you want to be bullish on your altcoins, we need to see it now hold the level. So it might create a double bottom, it might create a W, it might break up and then come back to retest some of these EMAs. It might even just consolidate sideways and hold these EMAs as support. Anything like that is going to tell you that the H pattern, the damage is complete. They don't want to take it any lower. You are now safe to reinvest back into your altcoins, and we would expect that we would move to the outside. So that is the bullish scenario for your altcoins on the completion of a H pattern. The bearish scenario is that now that that part has completed, that this part right here actually continues down to create a new lower low. This wick technically is a lower low, but if the daily candle closes back above the 200 EMA, it still has a chance of being bullish. So I would like to see more of a lower low than just a wick. We need to wait a day to see see if that happens. But the bearish scenario is that we create a new lower low, then we come back up to retest that support area that now has broken, and so we would be waiting for it to retest as a resistance area. And if it retested and we saw weakness, we would expect that it's actually going to come down from there, which would not be great for your altcoins. So the completion of the H pattern doesn't tell you we're going up or we're going down. It tells you that the damage that needed to be done here is done, and now it's a complete reset. And so you look at the market structure from this point onwards to draw your conclusion as to what is going to happen next. So we need more time for that, with this being daily candles. So with all of that being said, let's now take a look at the Bitcoin price. I'm on the 4-hour time frame. We can see that Bitcoin is in a pretty clear channel on the 4-hour time frame, a rising channel, just a weird ass channel, you know. And the move down last night, really all it did was hit the support. So what we need to see now is, if we're going to have a continued move to the downside, the price will struggle to get back above these EMAs. This blue one is the 50, the red one is the 20. And so what you would be expecting is price to make an attempt there, again, look weak in that zone. And if it starts to look weak, especially anywhere within this magenta candle right here, then you would expect it's probably going to come down, and maybe there's more to liquidate. Maybe the final damage isn't done. I would first be watching the 200 EMA. Now, that's not a short that I would take. Personally, I'm not looking to short it. I'm looking to see where it wants to bottom out or change trend so that I can take new long positions. The reason for that is because if I was to take this as a 4-hour short and my target was initially only going to be the 200 EMA, my stop loss would have to be at least above this magenta. It's only a 1.8 to 1 risk to reward, you know, on a 4-hour time frame where it would take time for that to play out. It's just not juicy enough. So I would rather let that go and keep my focus on getting the next long in the right spot. But that's the bearish scenario. So what would a long position in the right spot look like? This would essentially become the first side of a W. We would stay within the channel. We won't break below it, which we haven't yet. And we would change structure within the channel. And if we can do that, we would expect probably it's going to break out next. And why? Maybe not exactly next. Could be one more touch then after that. But the reason I say that is because we've already had here one cluster here that's one touch. This is 2 here, and this is 3. So usually on the 4th attempt, if it continues to get back up to that resistance trend line, the 4th attempt will break through. If the 4th attempt doesn't break through, so let's just say we get another touch to the resistance, then it means that there's more momentum that needs to be built before it can build up that speed to get through it. And that's where you look for the higher low. And the higher low would be another, like a second chance entry. If you weren't in from here or you weren't in from this support, you get that second chance entry. And as long as it creates that higher low, you would expect that on the 5th one, it's almost a definite going to break out. So if we're lucky enough to get this one play out here and we get this higher low within the channel, it is an aggressive entry. So you're taking a risk on a long position, really just up to resistance, because it could reject there and end up breaking down. But you take your long position because you want to be in from the cheapest price possible, and you hold it until that resistance. And then once it actually gets there, that's where you reassess and decide if you're seeing weakness in the candles, you know, like this, many candles struggling, big wicks to the top. If you're seeing that at that resistance, that's where you might decide to close that long position because you don't think it's going to break through. Or you could move your stop loss to break even, wait to see if it comes down and creates the higher low. If it does, you know your long position is safe because we're going to break out next. So therefore, when we're talking about my big 120K prediction, what happened last night does not change that at all. I still have that same kind of zone, although I hate to use the word prediction because people hold you to it. But of course, you know, it's not going to go from where price was when I made that analysis. It's not going to go up in a straight line. Of course, we're going to have pullbacks along the way, but I still think there is a pretty good chance we're going to see 120K sometime soon. As you can also see on the daily time frame, that as we did come up into the top line of this resistance, we did enter into a pretty large level of liquidity. So of course, when you get in there, those get picked up, and liquidity is essentially orders in the other direction. So these are short orders that liquidate long positions that longed too late, and that is going to cause a bit of a sell off initially as it enters the zone. So that will continue to happen. If it wants to come up and eat more of this liquidity, there will be many times in it that we get pullbacks before we actually do get to 120k. As long as it maintains the market structure with higher highs and higher lows, you stay bullish. And those liquidation hunts are just really good opportunities for you to get a good position. And I've got a very special Christmas offer for you guys in collaboration with BINGX. We've got an opportunity for you guys to win an iPhone 16. Now, this is an exclusive event for the Trade Travel Chill community. So all you need to do, if you already have a BINGX account that you opened using the link in the description of this video, then all you need to do is go to this second link to register for this iPhone event. If you don't yet have a BINGX account, then you can get one that gives you access to a 20% trading fee rebate by using the link in the description of this video. And once you've created and funded your account, you can then also register for this event, and that will also get you access to our free Discord. So all you need to do is get your account down below if you don't already have it, grab yourself that 20% trading fee rebate for life, then register for the event, and then follow along with our trades. Moving on to Ethereum, I want to look at ETHBTC first, because look at this. This is untouched chart from my last analysis on this channel, and so far it's okay. It's kind of on edge, but it's okay. It really is decision time now. So just a very quick recap. This had the potential to be the first side of a W formation, and this was forming the inside, in which case I said as long as the price held this blue vector here anywhere inside it and created a higher low, I would expect that this part would happen next and we will get a breakout on ETHBTC. And if we can get that, that will be bullish for ETH USDT as well. Now that some time has passed, we can see that we are attempting to come down to the halfway mark of that vector candle, and really we're just looking for daily candle closes now that are bullish. The current candle doesn't look great, but there's 13 hours to go as I'm filming this. Anything can happen, so you'll be checking the daily opens of ETHBTC every single day now that we are in this zone, to see if we can get a hint that the buyers are stepping back in and we are actually going to get that higher low. That will be your time to deploy, if of course you want Ethereum. So looking at ETH USDT, this was the original area that when we started heading down, I said to watch this area here. If it can hold, we'll be okay. This is just a retracement. We'll probably have continued upside. When we started moving down through these candles here, one thing I do, which I can't do this on YouTube after the fact, is the most important thing to me with trading and technical analysis is speed in candles. And that happens live in the moment. You have to learn to understand and read what speed is telling you. And so now these candles have happened so you can't see the speed. So when I saw this candle happening here, it was happening quite fast, and I went and put this warning out on my Twitter to let you guys know. You can see this is the candle right here. That was the chart there. What is that? That's the 15-minute chart right there. And I said here, the two high-level buy orders for ETH that I covered on my show today are still holding as ETH drops. So that was as the price was coming into it right here, and the orders were still there in trading lights. That's what I meant. I don't like the speed of the last couple of 15-minute candles, but my eyes are still on that area. If there's no strong bounce there, we may correct further. So with that in mind, if you are somebody who watches me on YouTube, but you don't follow me on my other social media, and you're not in my Discord, which also, like, big mistake, like, get in the Discord. It's not that hard. Like, there are instructions on how to get in there down below. So be sure to check that out. However, if YouTube is the only way that you get my content, also in the description down below, I do have my other social media. Make sure you only use those links, because there are a lot of fake things out there. And also, just a side note, I will never DM you, and no representative of Trade Travel Chill will ever DM you. So just, you need to get a bit smarter about that in the bull market, because it's going to happen a hell of a lot more. Every influencer has official channels, and it's your job job to make sure that you are looking for the official channels. So on that note, in the description of this video, my other social media is tagged. Be sure to go and follow me on Twitter, because in between my YouTube updates, if there's ever some sort of emergency like there was right here, I will do my best to do a Twitter post to let you know that something that I have previously said may have changed. And that's the markets, right? Like the markets move when they want to move. And sometimes the quickest way to warn you about that is to do a post on X as opposed to jumping live on YouTube. So when we go back and have a look, we can see here that it tried to hold for a while. It really did try to pick up those buy orders, but it just wasn't shifting out. It was rejecting the 20 EMA. It was extremely bearish. And from there, we ended up breaking down. So when we have a look at ETH on a higher time frame now, we know it's going to struggle because it's at a very strong key weekly resistance, but we also know that as long as it's holding EMAs, whether it ends up being the 50 EMA right here or even all the way down to the 200, if it really was to get that bad, that is, you know, it's still going to be maybe not the 200, but really if it holds anywhere above this green vector candle right here, that's still going to create a higher low in this move through here. So we may even just consolidate, because this is equal highs here. At this point in time, this is equal lows. We're really just consolidating on a higher time frame. Whilst it looks like scary dumps on lower time frames, on the daily time frame, it's just consolidation. So looking to any EMAs for it to hold over time as support would still have you bullish. And at the same time, if you get that ETHBTC starting to give you a bullish daily candle close, again, that could be your opportunity to get some sort of a lower high entry with the expectation that we will eventually break out next. Now let's take a look at Solana. Solana was the one that I told you I really had my eyes on, and I had two areas of interest. We went through Solana. Actually, let's go through Solana BTC first. This here is what I was waiting for. And so far, we're still in the part of potentially creating the left side W. You can't pick it until price shifts out and then comes back to create the higher low. So we are anticipating this, and we're waiting to see if this idea gets proven right. But right now, candles aren't really telling us anything. They are just consolidating within our area of interest, which comes from this vector candle right here. And we just want to make sure this is the low. As long as this is the low, we can start looking for the rest of this idea to start to play out. So then when we look at Solana USDT, again, we're still in the flag, which was something I mentioned could happen. On my last update, this was the candle to watch because we were holding the 50 EMA. So as long as we were holding the 50 EMA as support, there was a chance that it was going to break out soon. And what I said was that I was positioning myself in case it did, but I'm also prepared to be stopped out because that was an aggressive entry, knowing that I still had this area of interest down here, which it may revisit. And if the market got really super bad, somewhere around the 200 EMA. Now, let's talk about this price action in detail, because there's something I don't like. Even though price only came back into my first area of interest, would I open? And I did get stopped out, by the way. So that means I need a new position on Solana, which is great because then now you guys can get it with me. And then that's more fun when we're all in positions together. So the thing that is making me just wait a little bit longer is just by a hair, just by like a millimeter, this wick right here is actually lower than this one right here. So that means that if there were traders trapped here, which there have to be because the wick exists, so whatever traders were trapped here that survived through this were able to get out of their position at break even when this wicked back down. What's the likelihood? I don't know. But that's just factually, that's what it means, because price did revisit this entire area. Now, at the same time, it traps new people, right? So people, for example, if you're a traditional technical analyst, you may have drawn this as support. You may have, for some reason, been bearish. And so right under this support, you may have had a sell stop and said, as soon as it breaks, I want to be in a short position. And so you take this, and now currently you are the one who's trapped. Now you're not at a loss right now. Your entry is basically at break even. You could get out if you wanted to, but if this started to shift out fast you would end up being liquidated if you don't close your position. So there are currently people trapped in this new candle. These ones would be released. We're still within the vector. There's bullish and bearish scenarios for this right now, and so that's why we have to wait for a little bit more information. A closure back above the 50 EMA I think would be good, or we could go down to smaller time frames to see if we've got vector candles or anything that looks potentially bullish there. This here is a blue vector candle right here, so that was a stopping volume candle, which meant that it stopped the volume to the downside. Good, meaning it wants to hold support here. It doesn't want to break $200. Good. Like, I'm happy if Solana cannot break $200, but I am prepared for it too if it cannot start to shift out soon. So again, even here on the, what am I on the 4-hour time frame, I want to see price get back above the 50 EMA and create a higher low. That's going to give me a little bit more confidence that it's time to deploy money into Solana. But if I can't get that, if I continue to get rejections of these EMAs, or price starts to come back and eat into more of this wick, then I would assume we're going down maybe potentially below $200.